Hi everyone, today we're talking about Abbvie stock and if it's a buy in 2019. And the main reason why we're talking about this stock is because it's absolutely been slaughtered. This stock was at one point at its all-time high back in January, $123 stock. Now we're talking about a stock that's down at $72. And we're kind of seeing a bit of bargain value going in right now. And with the stock price kind of pretty much nearly going in half, we're going to talk about if this stock's now a buy. We're going to talk about some of the positives of the stock, some of the negatives of the stock to just be careful of. And then I'll give you kind of my opinion towards the end if I'm going to buy these shares and if I recommend Abbvie stock as a buy. So Abbvie stock itself, it was kind of founded in 2013 and it's not actually a brand new company. It was a company that actually broke away from another company, and that kind of means that even though it's been paying a dividend and it's been reported earnings since 2013, people see it kind of not as a new company. Because of the breakaway company, people see it as quite a safe company because actually, even though it has a dividend kind of history of over 6 years, because it's actually been part of another company that's paid dividend for quite more years than that, it's seen as a safe dividend history and a safe company, not kind of a new company to say. Now Abbvie is a pharmaceutical company which do quite often have a lot of swings in the stock market due to a lot of patterns that can change, drugs that kind of cannot get past regulations and need to go back for retests to try and get them through all the safety measures, and this kind of can really hurt the stock. Some of these can knock the company back 2-3 years because of all the work that they've done, and then they have to kind of retest all these drugs, and that can cause a lot of problems for these pharmaceutical companies. So we kind of see a lot of volatility in these kind of stocks. One thing that I saw that was quite interesting the other day, and it was just right before I was actually researching this company, is that in 2019, in the last kind of 6 months, pharmaceutical companies tend to be actually one of the best performers in the stock market. So timing that with seeing if this company is undervalued and worth investing in was kind of quite funny that we have a company that we're researching that's apparently going to be one of the best performers in the last 6 months. But the company itself was actually at highs of $123 a share, and that was back on 26th of January. Now, the main reason why this kind of started sliding down is because the company cut guidance going forward. Now, the main reason why it cut guidance is because it lost one of its main patterns, one of its main revenue sources. It lost its pattern in the EU. And going forward, it's actually set to lose that pattern in the US as well. But it's not going to lose that pattern until 2023 in the US. But it's kind of at that adjustment time now where this pattern for this drug, which is the Humira drug, that is making up 60% of the revenue of the company. Now, when something like that is, we saw the same thing in Apple, when a certain product is using 60% of your revenue up and you're kind of relying on that, it comes to an adjustment phase where the company has to kind of adjust and change how its revenue comes in. Apple had the same problem with the iPhone and they kind of brought the services out, and that's how they're trying to move. Abbvie itself, they've made adjustments and they're going to try change how the revenue comes in from having a lot of different revenue streams, and they've actually made a purchase of a company which was also seen in a negative light, and that also brought the stock down even more since then. But that's how they're trying to adjust, by buying out another company and kind of not making that drug kind of is 60% of its revenue. So the fundamentals of the company is the stock is $72, the P is 20. We have a nice dividend yield of 5.89%, which we'll talk about in a little bit because that dividend could be questioned just slightly, but we'll talk about that in a slight little bit. But looking at that on its own, and it's also got a history of raising that dividend as well, a dividend yield of 5.89 looks pretty healthy. EPS is set to be at 7.9%, which is really good. The sales is still at 5.79%, so we're not talking about a growth company, we are talking about a dividend company that has strong sales, strong EPS growth. So this is kind of not a growth play, this is more of a dividend play with a very healthy EPS and sales growth, so they would be able to carry on growing that dividend going forward. So I'm going to talk about some of the key points I made out when I was researching this company. Now, I've got a lot of information on this company because I had a very deep dive in the company, and I'm not very strong in the pharmaceutical area as well, so that means that I had to do even more kind of a deep depth dive and trying to work out if I want to invest in this company. And these are some of the key points that I actually found out when I was researching into the company. So the Humira patent loss is in 2023, which is going to make up which currently makes up 60% of the revenue. Now, obviously in the EU, like I said before, this patent has already been lost, and that's why the guidance has been cut. To combat that, what they've done is they bought out a company called Allergen. Now the CEO did a really good job because they actually pretty much got their share paid out back if you were an investor, and you also got a decent share of Abbvie stock as well. So the CEO did actually a really good deal selling Allergen to Abbvie right there. That was a really good move from their point of CEO. But the reason why they actually bought that company out is because they're trying to they believe that if they buy this company out, that could potentially move the revenue income stream to 40% for the Hamari, which is what they kind of do. And the kind of their way to kind of diverse that revenue is to go buy out that company and take that revenue from there. They also think that this deal will push the revenue and EPS more to a 10%. Now, I actually read somewhere that someone was saying that they believe that EPS can go to 20% because of this deal. I'm not too sure, but they think that going forward next year, the EPS of this company can go to a 10% EPS and 10% sales growth, which for me, any company over 10% is really interesting to me, and I kind of call that a growth company as well. So if we're talking about a company that has a dividend and growth of EPS and sales growth of 10%, that would be really interesting. So that's something to keep out of, to keep an eye of and see how that kind of goes going forward. Now, one of the big standout things that I was kind of like, whoa, I'm really not liking this right now. And one of the main things that really kind of changed my opinion on this company, because up to then I was going, this company actually looks really good, is that the balance sheet is so bad. It's one of the worst balance sheets I've seen for a while. And because of that balance sheet, it made me a little bit nervous about the dividend. Now, because the company's actually still growing, its sales growth is still growing, it seems like it'll be able to, kind of pay off the debt. It can keep that dividend nice and safe. The dividend's at a 50% payout rate. But the big concern for me is if Abbvie is relying on a lot of new cancer drugs as well to help with that revenue. And I've talked before about if they can't get them through the testing stages, that's going to have a knock-on effect, and the revenue will not grow as what they think. And if you take that with a recession coming around the corner, could that potentially cause a few problems? Would Abbvie be able to keep that dividend up if a recession came around the corner? How would they do paying off the debts? Would their growth go negative and then they wouldn't be able to grow the dividend? Would they have to cut the dividend? They've previously said that the dividend is safe, but I'm talking about they don't know if a recession is around the corner. That recession comes, they've got a balance sheet like that. It's a little bit risky for me. And that dividend could be at risk, and all that debt that they have on could come a bit of a problem for Abbvie going forward. But it's something you've just always got to take in consideration if that a recession would come around the corner. Like I said, the dividend payout rate is 52%, which is slightly high, but not too bad. One thing I like to see is the insider shareholder, which was really low. It was something like insiders in the company are holding about 0.9% of the company, which is pretty low. One thing that was interesting is they have started to buy shares in the company a little bit more recently, which kind of means they seem confident that they can turn it around, in my opinion. That's always a good sign, but right now the insider hold's pretty low, which obviously it's kind of interesting to see what the insiders are thinking. Obviously if they think the company's going to go up in value, they would obviously have quite a high shareholder hold, because they'll obviously make a decent amount of money from it. And the last 2 points are kind of more personal points, so they're kind of more opinions, so take these into considerations. But these are 2 things that I always when I invest into companies, these are 2 things that I massively consider. So you might want to consider them as well. But like I say, these last 2 were kind of my opinion. So when I first invested into the stock market or was learning to invest, one thing that has always stuck with me, and I've always listened to it when I've been investing into companies, is that I got told not to buy pharmaceutical companies when investing in the stock market because of the volatility, the pattern changes, the way that drugs can get delayed and not get past safety checks, and that could affect the company for a year, 2 years, and it's just very volatile. And I got told not to invest in companies for the long term, pharmaceutical companies in the long term, because of that reason. And that's something I've always stuck by, but I'm always willing to kind of look and see if the reward outweighs the risk. But that's always one thing that I always got told. And I also got told not to buy companies that I don't know. So I've had a lot of researching this company, and I feel like I've got a good knowledge. But in the whole pharmaceutical kind of industry and the other stocks that are out there, I'm kind of like, I don't really know, if I'm honest. I have a good idea about this company now because I've had so much of a research into this company. But the whole market and the industry in general, I'm not really clued up on, say like an Apple or a Constellation brand. Well, that also puts a little bit of me kind of off of investing in this company overall. So my overall opinion really is that I do like what the company is looking like. I do like the PE because that's quite a low PE for its history. I do like the price, the discount it's on, the dividend, the EPS, the sales. I just feel like the company itself, I don't really like the balance sheet. That's one main thing that puts me off, and in a recession, that could have a big impact. But the main thing for me is that I wouldn't personally feel comfortable investing in this company because of my knowledge. Because of the industry itself, I feel like also that the volatility, because of the pattern changes, it could be quite easy for this company to get affected because of all that. Drugs not getting past the testing phases and getting knocked back a couple of years. So from my point of view, I couldn't personally invest in this company because it goes against some of my fundamentals of investing. But if you were to invest in this company, I wouldn't blame you because it does look like an attractive company right here. But from my personal opinion, I can't invest in it. But if you were to invest in it yourself, I won't blame you because it does look pretty good. But for me, I'm going to have to give this one a miss. So that's me talking about Abbvie stock today, guys. I hope it did help you. I hope it gave you some information on the stock if you are looking into it. Like I say, you have a look at it. Don't take my opinion on it. But I'm obviously just going to give my opinion when I'm reviewing the stock, so you know how I feel exactly about it. Thank you for watching, guys. Give the video a like, subscribe. Thank you for all this support recently. It's so good. So thank you so much for it. My aim really now is if we can get to 500 subscribers by Halloween, that would be awesome. That's my new target. So if we could hit that, that'd be amazing. So thank you so much, and I'll see you in the next video.